You're watching Business Incorporated live on Channels Television. Coming up, Monetary Policy Committee of the Central Bank of Nigeria announces its last decision for the year 2022. Hello and welcome to the program. Well, according to the IMF, the global economic outlook is even gloomier than projected last month, citing a steady worsening in purchasing manager surveys in recent months. The IMF blamed the darker outlook on tightening monetary policy triggered by persistently high and broad-based inflation, weak growth momentum in China, and the ongoing supply disruptions and food insecurity caused by Russia's invasion of Ukraine. Today, the Monetary Policy Committee of the Central Bank of Nigeria concludes its November meeting and announces its decision. Analysts expect another hike in interest rate, but we will find out for the fact after an hour. But first, let's head to the markets now. Let's look at what's happening in Africa now. We see it's mostly positive sentiment on the African continent there with markets we track. Looking behind me there, we see Nigeria there up 0.33%, continuing that positive trend we saw yesterday in South Africa. It's up 0.35%, holding on to that 70,000 level. Let's look at other parts we track in Africa. Talk about Egypt now. That's also up over 1% at 12,578 points. And we see Kenya there closed negative yesterday. That was down 0.10%. All right, now for intraday numbers now, let's bring in Ayomide Salami, investment research analyst at Meristem Securities, to tell us what's happening on the NGX at intraday. Great to have you on the program.
Thank you for having me.
Yeah, so what's the sentiment at intraday now? We see it's about 0.33%. How's it looking live from where you are?
Okay, currently we have buying activities dominate the market. We have about 19 to 20 stocks are gaining relative to about 4 to 5 stocks that are losing. And stocks that are currently moving the market are MTNN, Intsbrew, and stocks in the financial services sector like Sterling Bank, Zenith Bank, UBA, and the like. So currently we are seeing more buying activities in the market.
Quite interesting. What is what's investor sentiment like? You know, knowing that today we're going to get that MPC decision for rates.
Okay. So we believe that investors have priced in. Of course, we expect the Monetary Policy Committee to sustain its hawkish stance. That's because the reasons given by the committee for the hawkish stance, which it has been taken previously, are still very much in existence. So we do not expect a different outcome at this meeting. And we believe that investors have already priced this rate hike into the market. And from the outcome at this meeting, we do not expect anything different from the equities market. We believe that we expect to further see bearish sentiment in the market. We believe that the market is still bearish and we expect that to persist. So we do not expect to see anything different from the bearish sentiment which has been prevailing in the equities market.
All right, and looking at what we have, right now at this hour, what are you projecting for close at the close of trade today?
Okay, so for close of trade today, we are likely to see the market close up. That's because, yes, quite all right, we have stocks that are currently losing. We have investors taking position on certain stocks. However, the volume traded of these stocks are not enough to move the markets. Like they are not sufficient for us to see a price change. For example, we are seeing profit taking on Nestle. However, we believe that the buying activities will dominate the market. And for close of markets today, we expect the markets to close in the positive region.
All right, positive close expected. Thank you so much. That was Ayomide Salami, investment research analyst, Meristem Securities. Thank you so much.
Thank you.
All right, that was Ayomide giving us the details there for intraday trading on the NGX. Now, let's move on to Europe. We see World Cup controversy is still dominating the headlines, from European captains abandoning the plans to wear One Love armbands in support of diversity of the LGBTQ community after FIFA threatened yellow cards to the ongoing concerns over migrant workers' abuses. Well, join us now is Janelle Dumoulin, join us from Berlin. Great to have you, Janelle. So walk us through the latest in European coverage of the controversial tournament.
So, in particular, we're talking about the football team captains of 7 European nations. So, England, Wales, Belgium, Denmark, Germany, and the Netherlands. So, they had of a rainbow armband in Qatar as a sign of solidarity with the LGBTQ community. FIFA, however, threatened to penalize the players with yellow cards, which would have resulted in a competitive disadvantage for them. The football teams released a joint statement saying that while they had been prepared to pay fines for wearing the armbands, they couldn't allow their players to be in a situation where they might actually have to leave the game. Now, all this is against the backdrop that homosexuality, of course, is criminalized in Qatar. And the Gulf nation has also been heavily criticized for its poor record on its treatment of especially migrant workers working on infrastructure for the World Cup. From over here, there's been a particular wave of condemnation at a debate last night at the European Parliament. You had some European lawmakers calling the World Cup a World Cup of shame again. This is a recurring phrase. Some calling for a boycott, some calling of Gianni Infantino as FIFA president. However, it has to be said that these voices existed as soon as Qatar was chosen to host the World Cup. That's not new. What's been happening now that the tournament has started is sort of consistent with the criticisms that people have had. And it would stand to reason that this is the atmosphere that would permeate the entire event. So from here on, we can probably expect more of the same.
Right, and we know Qatar spent an unprecedented amount of money, this World Cup. What does all the bad press in Europe mean for the event?
Here in Germany, at least, this feels very much like a different World Cup. You do have a number, for example, of viewing venues saying that they're boycotting the World Cup. They're not showing the games. I think it also makes a difference that the World Cup is taking place in the winter this time around to accommodate Qatar's sky-high temperatures instead of in the summer when you would have a lot of people watching outside in beer gardens all over the country. But suffice to say, this is still a tournament that is attracting billions of viewers around the world. It's just the kind of marquee event that brands would have a difficult time ignoring. It's expected to deliver record revenues for FIFA of around $5.4 billion. And that's even as there are clearly risks with doing business at the World Cup in Qatar. Look at advertising mainstay Budweiser, who perhaps did not expect beer sales to be banned at the event it is sponsoring. According to Bloomberg, the 7 FIFA sponsors, that's Adidas, Coca-Cola, Wanda Group, Hyundai, Kia Motors, Qatar Airways, Qatar Energy, and Visa, they said that they would not make any changes to their global advertising plans to reflect concerns for human rights. I think that goes to show that while brands are aware of the balancing act that they have to strike between being close to negative PR and the potential for lots of money, many brands in this case will choose to hold their noses and go for the revenue.
All right, what are the markets saying in Europe?
Well, here in early European trading, the picture is a bit mixed. There are, like everywhere else, like in Asia Pacific and in the US last night, concerns over China's tightening of COVID restrictions and the further stress that would afford supply chains around the world as offices are closed and schools in big cities are shuttered as well. And that's as cases keep climbing. However, at the same time, investors are also encouraged by signals that the Federal Reserve might be slowing its aggressive interest rate hike policy as there are signs of softening in inflation data in the United States. But of course, that is an ongoing story. For now, all I can say is that European stocks are still seeking the direction that they will go in today.
All right, we'll keep watching out for that. Thank you so much. That was Janelle Dumoulin there with all the details from Europe. Now, well, it's all about MPC Decision Day today right here in Nigeria. And we have Will to come and bring us up to speed on what's happening, with other MPC decisions, previous decisions we've had, in other African countries. And right here in Nigeria, we have Willie Bong with all of that hot detail.
Hot data, the hot data. It's actually hot in Africa because economists have actually projected that about 7 out of the 11 countries that they've been tracking are going to hike interest rates in this last final meeting. So we're looking forward to seeing Nigeria is starting today. So we're going to look for the outcome of that meeting. South Africa is Thursday. And we'll see subsequent others countries are going to follow suit. So we see central banks in countries are going to, as I mentioned, are going to hike their rates in the final monetary policy. And so we're looking at South Africa right now. We saw that the meeting is going to be on the 24th of November, that's Thursday. And the current interest rate at the moment is 6.25, which they have. So the Monetary Policy Committee is meeting this week, and another rate hike is expected. So we're seeing 5.5% down there. Inflation rate is at 7.5% from 7.92%, which we had in August. But the inflation target is 3% to 6%. Now we see in Ghana, now if we move over to Ghana, we see that Ghana is also a country that people are looking at. The Statistics Service reported its inflation rate rose to 40.4%. That's in the month of October. That's last month. And due to the cost of goods and services prices are continuing to surge in this West African country, Ghana's interest rate right now, its inflation rate is going to be a close call, because economists expect another hike to curb the inflation that has quickened more than expected, more than forecast in October. Now, the sharp decline in the CEDIO, so that's the Ghanaian currency, since the Bank of England's last MPC meeting, and the producer prices, that's the CPI, which has risen as the surge to 19.6% to 65.2% in October, are likely to keep headline consumer inflation elevated. Now, if we look at inflation for Angola, we move on to Kenya. We'll have Kenya there. We'll see that they're going to be meeting tomorrow, and then the central bank, their interest rate is at 8.25% currently. We'll see what they're going to do in this tomorrow's meeting. What they're going to hike rates, are going to maybe lower rates. Well, inflation rate is currently at 9.6% from 9.18% as in September. Inflation target is between 5% plus or minus 2.5 points on the low side. But Kenyan policymakers are likely to raise key interest rate for a second straight meeting after the inflation raised more than anticipated in October. That's the same thing we're seeing in most African countries. And the MPC will probably want to strike a balance between managing the cost of domestic borrowing, managing the rate of inflation, and the stability of the Kenyan shilling. Now, if we come over to Angola, we see that Angola is meeting on the 25th. I think that's about Friday. Their interest rate at the moment is about 19.5%, down from 20%. That Angola is one of the countries that has a deceleration in its inflation rate. Inflation came in at 16.7%, which was down from 18.2% as we have from September. Inflation fell for the 9th consecutive month in September for that country, and the result has marked the lowest inflation rate since November 2019. And that's a 3-year low. We may see MPC cut borrowing costs for a second straight meeting for that country. Now we go now to Nigeria, where we've seen inflation accelerate at a speed that is, it's actually slower than expected, but it's gradually growing, because we can feel it in the market. When you go to the market, you see the high cost of prices. It is actually, that's where you know that this thing is biting hard and the squeeze is being felt by the populace. Now we see it's going to remain elevated, likely to remain elevated, because of the devastating floods we've seen, where food-producing nations, especially the states that are producing rice and crops that are essential to the nation, have seen floods devastate these products, this produce, and that's further weakened the naira. And so this decline we're going to continue to see will be manifested also in the foreign exchange, because now we're going to probably be importing more than we're producing, and it's not very good for the country. So we'll probably see the Central Bank of Nigeria increase its benchmark rate for a 4th straight meeting. That the Central Bank governor did one at the last MPC meeting in September, like that as long as inflation is trending upwards, right, we're just gonna see an uptick in rates. So we're just gonna see what the central bank is gonna do, because inflation is coming in the last reading was at 21.09%, right, up from 20.77% we had in September. We're gonna see, is this big enough for the central bank to hike rates? Analysts are predicting 50 to 100 basis points hike, but
no, nobody's touching 150.
150. It's more like nobody wants to go there, because when they hike it to 150, it's probably going to just make, is it going to make life more difficult for the populace, or is it going to make it easier? Is it going to curb inflation, or is it going to worsen inflation?
As borrowing costs get higher, obviously that's going to impact most of the companies that rely on loans, to run, their day-to-day businesses.
Especially the real sector. They're really feeling it. They're really feeling the bite. And they're asking the government to, kind of like give them some consensus, some incentives, or some like can I get a pushback or a cutback in this cost?
Break or tax break or something.
Yes, something to make sure that what we're producing is even sellable. Like they can actually sell what they produce, because if the cost of sales keep increasing, prices of goods are going to keep increasing, and then people will be able to buy the products that they're selling, and that's going to reduce. If retail sales drop, that's not actually good for the economy as well.
So much for central bankers to
consider in this meeting.
Trying to kill inflation, but you don't want to kill the economy.
You don't want to do that. So it's that balancing act that we're going to see how the government, all the CBN governor is going to manage it today. So we wait and see. Just in a couple of minutes.
Yeah. All right. Thank you so much, Will.
Right.
That was Will there giving us the details for other African countries. But after the break now, we'll drill down on bringing down inflation right here in Africa. And also, we've seen currency issues with other African countries. We're going to be talking about that after the break. Just stay with us. Welcome back. It's still all about monetary policy committee meetings. Well, the monetary policy in Africa, financial risk, including currency depreciation and inflation, is topping the list of challenges facing the 54 African economies in the year. And the central bankers in Africa look ready to fight inflation head on. Well, joining us now is Abdul Kudus Isiaka, senior economist at ProShare, right here in our Lagos studio, join us. And we also have Professor Joseph Nana, chief economist at Development Bank of Nigeria from Abuja via Zoom. Great to have you both on the program.
Thank you for having me.
All right, I'll start with you, Abdul Kudus. Now, we've seen, Africa trying to battle, inflation, and we've seen, most of these economies actually raising rates, at this time. Do you think Africa is winning the battle yet?
All right. I think fundamentally we need to understand what the dynamics of inflation is on the African continent. So basically, you're looking at currency devaluation. You're looking at, foreign component of their debts rising due to monetary policy normalization in the West, and a number of other factors. Of course, the global energy crisis, also the global food crisis, being that many African countries are dependent on Russia and Ukraine, which are the two countries at war at this point. So if you take all of that into consideration, you understand that there are, a lot of dynamics to it. But are they winning the war? I would say that, they are taking steps. They are trying to raise rates. But inflation is still elevated. Take Ghana, for example. Inflation surged to over 40%. And in the peculiar case of Ghana, right, you're looking at a situation where they have a very severe current account problem. And despite some of the gains they may have made from exports of crude oil and other commodities, they still have this challenge of the balance of payment problem. So you're looking at a situation where if it doesn't get a subvention of some sort from the IMF, it's going to be in a very dire situation. So they've been in talks and there have been conditionalities from the IMF, one of which is that they need to raise their rates. It's expected that they will raise rates up to 26% by 2023.
That's a big one.
As we speak, rates are about 24.5%. Rates are already elevated and they reflect the condition of inflation. But then again, you're looking at inflation at over 40%. You're looking at the rates at around 24%. That still leaves you with a negative real rate of return.
Right.
And it has implications for every economic unit.
Exactly. All right, let me come to Professor Nana now. So at the end of the day, Africa is also battling, inflation right now. What other means do you think central bankers in Africa have? What else do they have in their arsenal, aside from rate hikes?
Thanks for having me, Laddie. But like the previous speaker has said, a lot of African countries are actually challenged due to the inflationary pressures caused by the cost push inflation, as well as the demand pull as well. But that's largely the major causes of inflation. But in 2022, a lot of it has been more complicated than just that because of the COVID-19 lifting of the lockdown and, of course, the war in Ukraine. So that a lot of, I guess, in a way that's caused the supply chain bottlenecks. And of course, let's not forget China, the zero tolerance China had which has now been a bit eased to allow the ports to operate at least in a full, semi-full way. But having said that, there are a ton of toolkits, ton of tools within the toolkit of the Monetary Policy Authority to use. While using rate hikes might be one tool, I know here in the case of Nigeria, we are redesigning the Naira, which in a way is essentially trying to capture in the excess liquidity. In the past, central banks have used CRR. Historically, stabilization security has also been used as a way to curtail or at least manage or mitigate inflationary pressures. Having said that, though, central banks around the world cannot be everything to everyone. It has to be a fiscal as well as monetary policy coordination that we need to combat and fight inflation, meaning that we also need to produce enough. Maybe perhaps a lot of import substitution needs to be practiced and implemented in earnest. But I think by and large, we have a situation whereby the central banks have been essentially challenged to do more. And that is why we see the redesign of the Naira occurring to, of course, prevent the so-called illicit or counterfeit use of the currency, as well as, of course, fight inflation by capturing the monies outside of the banking system. To be sure, we will see if, in fact, hiking the rates will help curtail inflation. But I still sincerely believe, though, a lot needs to be done by the fiscal authorities as well, not just the monetary side, because the monetary side has a handful of tools within the toolkit. We need the fiscal authority now to do the heavy lifting. I'll pause there.
All right, I guess all hands need to be on deck to battle inflation in Africa. All right, I'm going to thank you, Abdul Kudus Isiaka, Economies Pro Chair, and Professor Joseph Nana, Chief Economist at Development Bank of Nigeria. We're going to close Business Incorporated right now, and when we come back at 2 p.m., we'll do the MPC coverage proper. That's in a moment. Thank you so much for watching. I'm Ladi Williams.